Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, February 10th, and again, this week's not big on the economic news releases, but we do get the initial jobless claims. So let's take a look here. Came in very surprising number. It came down to 383. First time we've seen under 400,000 for quite a while, actually. So I'm going to spend a little time showing you some of the charts of the jobless claims and kind of what that might mean. Wholesale inventories were up from 0 to 1%, so that's fantastic news. All this should bode well for equities markets. Federal budget will be released later today. The last one was at negative 43 billion, so hopefully we'll show some improvement there. Technicals, well, like I said, the stock market is down right now, and the 10-year Treasury auction went well yesterday. So all good news. So let's take a look here at the jobless claims here. This is over a 4-week average here. So we've been kind of averaging lately right around the low 400s. Low 400s when we were early on around 09, as high as over 600,000 that we're every week we're applying. So we need to obviously get down closer to about, in this range under 300,000 to try to satisfy it, get caught up for the next several years. So hopefully that will improve. So let's take a look at the next one here, and this is the initial jobless claim. So as we see here, we dropped under 400,000 for the first time in quite a while, since August of 08. So we were under, almost, was at about two and a half years, long time. We haven't been under that mark. We've been up, like I said, in the sixes, been hovering lately for probably about the past year in the high fours, and it started slowly dropping down to about low fours probably since halfway through the year. So this is kind of good news here. Hopefully this is a good sign, a good trend that we're kind of reached the bottom of the jobless claims here, and then hopefully jobs will be next. Hopefully we'll start seeing more jobs. This is what's kind of putting the drag on our economy, is the lack of jobs. So let's take a look here at the bond market. As we saw here, we had this trend going downwards. Yesterday we had a nice, we were way down and we spiked right back. We had an improvement in the mortgage rates yesterday. We started out a little bit lower, but we came back up. So I guess my question is, with the stock market, good news for the economy showing there, and then the bond market showing to improvement, most of that money would normally go into the equities market. Kind of makes you wonder, are we starting to have the correction now? Is this a sign of a beginning of a correction that's going to go forward here? Personally, I think we've hit the bottom. We could have a nice long rally coming up. So let's keep an eye open for it. So, and let's this is good news for those who want better interest rates for mortgage rates, and obviously not as good for equities if you bought high. So, but that might be a lesson for all. Buy low, sell high. So, all right, folks, have a great day, and let's pull for this rally.